Good afternoon, everybody. The presentation today will focus on the bounce back plan towards a sustainable and resilient economy. In 2021, we are learning to live with the virus. Initially, we thought that the virus would go away in 6 months, like SARS-1, when we first encountered COVID-19. The reality today is that the virus is not going to go away easily, and we will have to live with it for a longer period of time, similar to the flu. Our progress in 2021 has been enabled by the effective management of COVID-19 risks. As I will show later on the data on recovery, that recovery has been aided by a number of factors. For instance, we shifted from large area community quarantines and blanket restrictions to an alert level system and the use of granular lockdowns. The second is our shift in the risk area from a general to more specific, governed by the 3 Cs, or close space, crowds, and close contacts. Number 3, we accelerated the vaccination program, and we have reduced the restrictions for those who have been vaccinated. Number 4, we have removed the mobility restrictions based on age in the areas under alert level 2. We have also begun the pilot face-to-face schooling after more than 1.5 years. We have increased our transport capacity to 75 to 100% in alert level 2 areas. We have also reduced requirements when traveling, whether domestic or for international travel, especially for those vaccinated. And following global norms, we have removed already the face shield requirement in areas under alert levels 1 to 3. All of these are beginning to show in our latest economic data on our recovery. Let me now talk about the progress in the first 3 quarters of 2021 and the momentum that we are seeing in the last 2 months of the year. The Philippine economy is beginning to recover. However, the sustainability will depend on our actions as we deal with this virus. From solid growth of around 6% prior to the pandemic, our economy fell to as low as minus 17% growth in the second quarter of 2020 at the height of the COVID-19 pandemic. We have gradually recovered. The latest data show that we have reached a 12% quarter growth in the second quarter and a 7.1% growth in the third quarter, despite the imposition of the ECQ and the MECQ and the Delta variant. All of these are showing a continuous uptrend. In fact, between the second and the third quarter, we have seen the economy grow by 3.8% quarter on quarter. This indicates the sustained recovery, again, despite the 2 weeks of ECQ and a month of MECQ in the third quarter. If we can perform at this level and manage the risk in the third quarter, one can expect even better performance in the fourth quarter of 2021. Many of our indicators are showing sustained progress. In terms of the manufacturing production, we are seeing strong recovery. The index is fast approaching 100 from as low as 14 last year. That is the red line that you see. In the same month this year, we are seeing the index approaching 100. In terms of Purchasing Managers Index for the Philippines, we are seeing a sustained recovery of around 50 and above. Every time you see a 50 or above, that means the purchases are more than or rather the orders are expected to increase in the coming months. And this is important for several of our sectors, including the exports of electronics. In terms of exports, our exports continue to grow at a positive rate. They are normalizing now compared to a higher growth in the previous months, but all of these show both the recovery of our global trading partners and the recovery of our shares in the export market. In terms of imports, we are seeing strong growth still at above 25 to 30% in recent months. This is fueled by both the resumption of consumption and also of investment, in particular our infrastructure program. In terms of public construction, compared to last year, which is indicated by the red line, we are seeing much progress in this year, in 2021, with infrastructure growth that is more than 70% higher compared to the same period last year, in particular in the second quarter and the third quarter. We are also seeing the unemployment rate going down in recent months from a high of 17.6% in 2020 and 10% last year. We are seeing now the unemployment rate below 9%. And as we open the economy further in the last quarter of 2021, we expect the unemployment rate to further improve in the coming labor force surveys. We are also seeing improvement in the underemployment rate. We are now back to the pre-pandemic levels of below 15% from a high of around 17 to 20% at certain times when we experience the peaks or surges in COVID-19. And we expect this to be sustained as we further reopen the economy in the last quarter of 2021. We are also seeing significant progress in availment of public transport. This is the Google data showing visits to the public transport station. They have strongly improved compared to last year. Last year is recorded by the red line. This year, 2021, is recorded by the blue line, despite the ECQ and MECQ imposition. In the third quarter, we are seeing the visits to the public transport significantly better. And the latest data is that we are 15% below the normal range prior to the pandemic. Actual visit to workplaces or physical presence in the office have also improved. We are currently down by 17% compared to normal, and this is expected to go up under the better alert level system or alert level 2 in the NCR region. All of these also show a continued increase or are commensurate to the continued increase of employment as that we can see in 2021. In the past few weeks, we have surveyed some of the key sectors of our economy, and they are seeing significant progress and are beginning to recover towards their pre-pandemic level. Take, for instance, airline. From a pre-COVID normal range, it fell to only 5% of capacity in September of 2020. That has gradually increased to 16% of the pre-COVID capacity by September 2021 and are reported to have reached 40% capacity in November. And this is in line with the relaxation of the quarantines to alert level 2 in many parts of the country. In terms of visits to the mall, from a 100% pre-COVID, it went to as low as 24% in September of 2020. Prior to alert level 2, it only improved marginally to 35%. But under alert level 2, which is this month, November 2021, and with children allowed to go out, major malls are reporting significant increase at 50% of pre-pandemic normal capacity during weekdays and a high of 81% during weekends. And this is largely driven by families and children that are already going out. In terms of consumption in major fast food, we are also seeing significant progress. From a pre-COVID normal of 100%, it went down initially to 35%. But as more people work and as children are allowed to go out together with their families, this has improved to around 78% in November of 2021. All of these show that with further easing of the restrictions and opening of the economy, we are likely to recover to our pre-pandemic nominal GDP level by early 2022. Let me now end with the prospects and our recommendations. Prospects for 2021 remain encouraging and will allow us to recover to pre-pandemic levels around the end, or rather the start of 2022. This will prevent long-term scarring and productivity losses. Our Year-to-date 2021 growth is at 4.9%. As of the third quarter, we are targeting 4 to 5%. The trends show that it will be easy to reach or exceed even the 5%. And with further relaxation, we are likely to achieve our 7 to 9% target. There are three enablers of our growth targets. The first is accelerating the vaccination program, moving to alert level 1 by January, and this requires the cooperation of everyone in maintaining the health standards so that we will not have a reversal of our gains, and to maximize the use of the resources of the government in the 2021 and the 2022 budget. COVID-19 cases have continuously gone down from its peak of 26,000 in September to around 1,000 in the past week due to our rapid vaccination drive, better risk management, and the public's cooperation. From peaks that we saw in previous months, we have managed to bring down cases significantly in the last 4 months. And we are able to do so without blanket quarantines as we shifted to more targeted quarantines. Even during the short ECQ imposition, we allowed the public transport to operate. We allowed workers to be exempted from curfew and allowed most sectors except those falling under the 3Cs to operate at full capacity. And with everyone's cooperation, we expect the holiday season to also go through without major or increase in the COVID-19 cases. Our vaccination program is on track. As of November 21, 75.6 million vaccine doses have been rolled out. 42 million of these were administered as a first dose, and 33.6 million were administered as a complete dose. This is on track, and given our rapid vaccination drive every day, on track to achieve or get close to our target of vaccinating 70% or the adult population by the end of the year. To solidify our growth performance and to achieve our targets for this year and next year, we need to build on these gains to further accelerate the economy. We have recommended 5, and we are working hard to achieve all of these. The first is to reduce the artificial barriers to vaccination, and this will include, at the appropriate time, expanding the vaccination to children of age 5 and above. The second is to move to alert level 1 by January 2022. And again, this will require the cooperation of everyone in adhering to the health standards, especially during the holiday season. Number 3 is the resumption of face-to-face classes for all schools in January 2022. We are currently piloting in several hundreds of schools. We will gather the lessons learned, improve, and ensure that we can open more schools in the start of 2022. We also propose to increase public transport capacity to 100%, and this will allow the movement of people instead of limiting seats and keeping people waiting in the public transport station. And we will continue also to streamline requirements for local and international travel. The data I showed you a while ago is likely to improve further if we focus on further opening up the economy and reducing the barriers to mobility and freer movement of people. Over the medium term, as we recover from the COVID-19 pandemic, we propose to build on our present reforms and do more in the 4 areas that will help us achieve and sustain our upper middle income country and our ambition natin 2040 targets where no one is poor. We propose to focus on number 1, smarter infrastructure, wherein we use digital technology and networks to improve the commuting experience of the people. The second is to ensure that no place is left behind in the Philippines. We will improve the regional equity of distribution of resources so that we provide the needed human capital investment in areas where poverty are high or growth are weak, and also to ensure that the different areas of the Philippines are well connected by infrastructure to connect people to markets or growth centers. The third one is to invest in the future through our innovation program. We have the Innovation Act and we are soon to launch our innovation strategy. And this will be one of the underpinnings for sustaining our growth as an upper middle income country in 2 years' time and achieving our high income country status, hopefully by the year 2040. And finally, is our effort. We need to intensify our effort to mitigate and address the issues around climate change. And this will be an important area, I think, for getting everyone and all our policies aligned as we approach the next period of our development. With that, thank you very much.